Hey, I'd like to welcome you to another episode of Money Matters Top Tips for Success, where each and every day I bring on new business owners, entrepreneurs, and executives and have them share their top tips for success with you. My name is Adam Torres. You can follow me on Instagram at AskAdamTorres. Keep up with my book releases, book tour schedule, signings, all that other good stuff. Always love to connect with you there. And as always, if you'd like to apply to become a co-author of one of my upcoming books, just head on over to the website, moneymatterstoptips.com, and click on Become an Author to apply. All right, so today I have Brooks Kincaid on the line, and he's EVP of Finance and Strategy over at Tide Rock Holdings. Brooks, welcome to the show.
Hi, thanks for having me.
All right, so I'm excited to get into what you're doing over at Tide Rock Holdings and how you're helping your clients. But before we do that, let's get a little bit further into your background. So how'd you get started in your career and in business?
Well, I started off on combining the finance world with the entrepreneurial world. Started off in investment banking, working with high-growth companies in Silicon Valley, so mostly tech and healthcare companies. And after doing that for a few years, I spent my time. I wanted to go see what a big company was looking like, and picked what I thought was the best operating one I could find, and went to Google for a few years. Did large-scale strategic partnerships there. And then decided to dip my toes in the entrepreneurial waters. And after getting my MBA, started a battery technology company. So took my lumps and scars in that industry, but sat on the side of being the entrepreneur and being ultimately on the opposite side of where I am now, in the position of presenting to investors and raising venture capital money and deploying that and managing that. So kind of had that holistic background, touching the business experience from multiple different perspectives prior to ultimately joining Tide Rock, where I am today, and where we focus on buying lower middle market businesses. These are kind of the typical profile would be a business doing 10 to 20 million of revenue, 1 to 5 million of EBITDA, and really operating in a niche sector where we can focus on growing the business by virtue of sort of blocking and tackling, and really focus on just growing that free cash flow in a sustainable way. The profile would be, someone who's that mid-60s founder owners, built the business over 10, 15, 20 years, looking for an exit plan, doesn't have a succession option, and we come in and help them sort of take that next step, either directly into retirement or into the next phase of the company's growth, and try to leverage my experiences in the banking, corporate, and startup world to relate to those types of owners and help transact, as best we can.
What are some of the challenges that you find these owners in your niche have? Because what you're saying, it's not an easy thing to accomplish. So somebody's been working on the business for 10, 15, 20 years. Sometimes they're at this certain level of growth, and either they're thinking about maybe exiting or that next level of growth. What kind of challenges do you typically find with these?
Yeah, it's a big part of our thesis is around what we call artificial growth constraints, and we see them in almost all the companies that we go after. And they typically fall into a couple different buckets. One would be sort of personnel related. So there's a certain personnel that you can attract, retain, and afford in a company of that size. And also just a company whose growth may have been sort of tailored to a certain lifestyle expectation or desire of the former owner. And so, if they ultimately then decide they want to grow to a new level, they may be constrained by the personnel they have in place or the functions that they just don't have filled. Frequently we come into a company and they may have someone who they call the controller, but that's not necessarily in line with what we might expect a controller or a CFO to do, and they're held back by their ability to get more complex in their financial operations and or responsibilities. Same thing in marketing or sales. Frequently, a company will have a really killer product or service, so much so that they've been able to survive largely on people knowing who they are or passing on via word of mouth. And so they've never had to really invest in or develop a sophisticated sales and marketing team or machine. And then another bucket of constraint that we will typically find would just be in that sort of desire or risk tolerance aspect. So a closely held business by a founder owner may have the opportunity to grow with a client or customer, but ultimately gets to a point where to continue that growth is going to require them taking on additional resources, employees, other responsibilities that they may not want to take on. They've been doing quite well, at least from their personal standpoint, and taking on that additional risk or responsibility or overhead just doesn't sound attractive to them, despite there being a clear and present opportunity to grow the business if they would take that on. And so that those break points are frequently where we will find where we're entering the business, and someone has left opportunity on the table, but for very sort of understandable and justifiable reasons. And we try to come in as an institutional investor that sits at a lower level than the typical private equity investor would sit. We are more comfortable taking on some of the operational enhancement and improvement risks than maybe a financial engineering oriented or leverage oriented investor would sit. We leverage our operating background to say, yeah, this is salvageable, or this has real opportunity to grow from, or maybe it doesn't. This is something that we don't want to work on because it doesn't matter how much sweat equity we put into it. It may never get better than it is.
What are the type of companies or niches that you like working with? So is there a particular market niche or size? Is it mid-market, or what? Give us a feel for that.
Yeah, so it's definitely, in our parlance, lower middle market, 1 to 5 million operating profit, and really our sweet spot will probably be in that 2 to 3 million. Not quite to the point where you can easily put leverage on it when you would start to compete and see multiple pressure in terms of the market coming from other institutional investors. Where we play, it's still a more value-oriented buy. So we're not, you'll see market multiples today, people spending 8, 10, 12. If you're in certain SaaS industries, you could be well north of that in terms of multiples of EBITDA. We don't play in that game. We're typically in the sub 6 multiple range. And that's really tied into our desire and goal at Title Rock Holdings to develop an investment return profile that has a long-term equity growth component to it, but also a yield component to it. So all of our investors come to us largely because they're getting a current and regular yield out of the aggregate free cash flow of all the companies we own. And so when we look at making a new investment, we look at it and say, hey, is this going to be accretive to our pod or to our holding company, add additional free cash flow that we can then distribute out to our investors, or is it going to be a drain? We're going to have to overpay for this in order to get a limited amount of free cash flow. So outside of that, from an industry perspective, we're pretty broad. We only do B2B, so we don't do any B2C businesses. But within the B2B realm, we're quite broad. We would not consider ourselves focused on any one niche or one industry.
Speaking of investors, what is your, a lot of potential investors listening to this now, what does your investor profile look like? What's the right type of investor, and what would be what's the right profile?
Great profile. Today, it's a mixture of family offices, multifamily office, ultra high net worth, and the business owners themselves. So we have a unique, probably too detailed to get into on this particular call, but we have a unique structure that allows us to work with the sellers of our company to, in effect, postpone any capital gains tax associated with effectively diversifying the equity that they have in their particular entity into the equity of our holding company or our pod, and by virtue of that, get access to all of our holdings and the cash flow that comes from it. So that structure has proven to be quite attractive to a lot of the sellers that we work with. And, these sellers will, by virtue of exiting their business, become high net worth individuals, and they find the opportunity to invest in and maintain the pitch to their employees that, yes, I'm exiting the business, but in a way, I'm still an owner of the business, and I'm going to stay involved psychologically and emotionally. It works out quite well in a lot of the businesses or the transactions that we do.
No, it's great. So, Brooks, if somebody is listening to this and they do want more information on Tide Rock Holdings, what's the best way for them to reach
out? The best way to reach out is just via our website. Very, very clean and simple. If you reach out on the contact form, that ultimately get in touch with myself, and we're readily available and accessible. Otherwise, you can always find myself on LinkedIn, and I would like to think I respond pretty quickly. And generally speaking, we're open to a variety of different relationships, both from an investor standpoint, and then we're also, we would like to think that we're somewhat unique in both our model and positioning in the market, and so people who are have leads on potential deals, we're always happy to take a look at those and see if there's something to be done.
Fantastic. Well, hey, Brooks, really appreciate you coming on the show today and sharing more about your background and all the great work you're doing over at Tide Rock Holdings to help your businesses, your investors, and the business owners. So thank you for that. And to the audience, as always, thank you for tuning in. Hope you got a lot of value out of this. If you did, don't forget to subscribe to the podcast, leave me a review on the Apple iTunes Store, leave me some comments on that YouTube video. We launched that YouTube channel this year, Money Matters Top Tips. Give us a subscribe and give us some comments. Let us know what you're doing in investing. And Brooks, thanks again for coming on the show.
Yeah, of course. Thanks for having me.